Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined by Ben Rains this week. And we're kicking off February with two hot stocks. Both are Zacks number one ranks, of course, that's why you're here, but they're in very different industries. But both are areas you should not be surprised. I brought you an AI infrastructure stock, and Ben is bringing you a uranium producer. So, what's going on with my stock? Mine is Modine Manufacturing, ticker MOD. And if you watch the Market Edge podcasts over the last year, you might recognize this stock because I've talked about it in the past. I own it in Zacks Value Investor portfolio and my own personal portfolio. What do? They're in thermal management. And that's the cooling of the data centers. That's been their hot area the last 2 years. And they've really been strategizing to move the company in that direction. The older business that they've had for many years has been in automobiles, commercial vehicles, heavy duty trucks, that area. And so they finally have done it. Last week, they announced they're spinning off their performance technologies group. That's in the older type of business. It's still a great business, but just a little bit slower growth than what's going on in the data centers. And so they're going to focus on climate solutions in the data center side. And with all this going on, they're also reporting earnings this week on February 4th. So if you're watching this after February 4th, tune in to see what those earnings were like. But they did hold a conference call when they announced this spinoff. Modine shareholders will get a 40% stake in the new company, but they also did say that they're expecting 50% to 70% annualized growth through 2028 with their new climate solutions company. That is the higher growth business, as I mentioned, so it's not a surprise. But how do we get the number one rank? Even before the earnings, let's take a look at what's happening with earnings, its chart. The shares are soaring on all this news. So it is a Zacks number one rank. And as we scroll down, you can see the price consensus and surprise chart. This is the earnings growth that they're talking about. It's just up and to the right with these solid lines. Look at 2027 up there as well. And great earnings surprise track record since the whole AI revolution started back here in 2023. This is where it started. You see these big earnings surprises. We had one miss in there, and then it's been back to surprises. Now, the surprises have gotten smaller over the quarters because this last one was 9.3%, because the AI play is being priced in now. But with everything going on and the spinoff of this company, they have done a lot of acquisitions as well to really get their business in the place where they want it to be. Then it's unclear what the analysts, if they're staying too conservative or what's going to be happening. So let's look at the detailed estimates as Modine shares take off here on all this news. So you can see we're waiting on 2026, fiscal 2026 here. No changes here because that's already in the books even before all these announcements. But next year, we do have the one analyst since the announcement raising for next year based on the company saying 50 to 70% growth. And you can see scrolling down, 643 now expected for next year, up from 634. This is ahead of the earnings, obviously, or any kind of guidance they're going to give on that. And we see now 38.9% expected on the earnings growth for next fiscal year after a very solid 14.3% for this year. But they have been beating every quarter because the analysts really haven't been keeping pace with what is going on and the demand on the climate side with the data centers. We're having double-digit revenue growth here, 17%, expected for this year, 14.8 next year. But again, they are now spinning off that performance technologies business. So some of that in the revenue is going to be spun off. But they are still having a strategy to have 2 billion in revenue now with this newly formed company as we move forward. So this will be an interesting thing to watch. And again, price and consensus. Let's just take a look at the pure play price and consensus chart again. Looking very solid. The shares now busting out. As I said, I do own it in the value investor portfolio here at Zacks, but we bought it back here in 2023 when it was much cheaper. It is now trading at 38 times. We'll see if those estimates get revised even higher after this earnings report, but it's not cheap on a PE basis anymore. And so this has become more of a growth play than just a value play. So for you growth investors out there looking for a infrastructure play, the money is still being spent. We just heard from Meta Platforms that they're going to spend 115 to 135 billion on capex. They're building these data centers. They're buying the chips. They're buying the racks. And what do they have to do? They have to cool them. And this is going to be true of Oracle, Amazon, everybody. All these hyperscalers are going to be building out the data centers globally. So companies like Modine are going to be big beneficiaries. That money is going to be spent, at least here in 2026. So think about all of those billions, and Modine, a fairly small company, getting just a sliver of that, but what it's doing to their earnings growth. So I really still like the infrastructure plays, even though they're not as cheap as they were before. This AI revolution story is still going to be marching on here in 2026 and probably into 2027 as well. So keep these ones on your watch list. Listen in on this conference call with Modine. But a lot of these infrastructure names are revealed in the Zacks rank. They're getting these number one ranks. So that's how you find them. That's Modine Manufacturing, MOD. And now I'm throwing it over to Ben for his number one ranked stock in uranium.
Thanks, Tracy. Hello, everybody. Ben Rains here for Top Stock Picks at Zacks. Today I'm looking at Cameco, which trades under the ticker CCJ. It is the second largest uranium miner in the world. The Canadian miner is also a leading supplier of uranium refining, conversion, and fuel manufacturing services. Cameco is one of the only large-scale uranium stocks that most regular U.S. investors can buy. On top of that, Cameco provides investors with long-term upside across nuclear energy construction through its 49% ownership stake in Westinghouse Electric. Its recent upward earnings revisions landed a Zacks rank number one strong buy right now. And the nuclear energy renaissance sent uranium prices soaring to their highest levels in 15 years back in 2024. Despite a recent pullback, uranium prices have soared 170% since the start of 2021. More importantly, demand is projected to outstrip supply for years as the U.S. attempts to quadruple nuclear capacity while also weaning off Russia and its sphere of influence, which currently dominates the industry. Cameco stock has soared 160% in the last 12 months as part of a massive surge over the last 5 years that helped it finally surpass its previous 2007 peaks. Wall Street piled into the stock because of the increasingly critical role that the Canadian uranium miner is playing in the nuclear energy revival and therefore the AI arms race. Wall Street's all in on the AI energy trade as the AI hyperscalers, US government, and other pillars of the global economy kick off a nuclear energy revival to fuel the power-hungry AI arms race while weaning off fossil fuels and becoming energy independent. So now let's dive into some estimates and more on Cameco. Okay, we are now on our Zacks.com ticker page for Cameco, and we can see here, as I mentioned already up top, that it's a Zacks rank number one strong buy to do its upward earnings revisions. So we'll go right there to check that out. So we can see these are its upward earnings revisions over the last several months. You can see that it's trending in the right direction for both 2025 and 2026. And if we go here, we can go to its detailed estimates and we can take a look here as well. So we can see that its most accurate estimates are even well above its already beefed up consensus estimate. So up 13% for its most accurate estimate for 2026, which is a really positive sign. And then if we actually look at the growth that we're expecting for Cameco, it's really impressive. So 100% growth we're calling for in 2025, and then another 50% growth, 55% growth nearly in 2026 to go from about 49 cents per share in adjusted earnings in 2024 all the way up to $1.51 per share in 2026, on top of, or boosted by 4% roughly revenue growth both periods. You should also note that the company does pay a dividend as well. We can see the yield is pretty small at the moment, but the stock's gone nuts. So you kind of get a little bit of a bonus there. Now we're going to go take a look at some of the stock price movement. So this is that 160%, 157% run over the last 12 months. And then we can zoom out over we go to the last 25 years. So we can see I have here that it finally broke up. This is these 2007 peaks, and it finally broke above those levels in the last year plus as part of a huge run over the last 5 years. You can see here up nearly 800% over the last 5 years as Wall Street slowly realizes that the uranium energy trade is going to be back on as the nuclear energy revival takes place, and it really is just beginning. So then we can, as we said, we can look over the last 3 years, see that still up 333%, blowing away the S&P 500. And then we can take a look at some technical charts here as well to give people a sense of where the stock is in terms of some momentum. So it's pulling back like a lot of these uranium names. Here we can even go to the 3 months. So we can see it hit new all-time highs and then found some selling pressure as it got a little overheated. So these are these RSI levels down here. You can do some displaying data. So it got to some of its most overbought RSI levels of the last year recently, and it's pulling back from those levels. So we can see it's trying to find some support at its 21-day moving average. If you're an investor, maybe you want to see if you start a position here, and then if it falls any further, you could take another dive into it and slowly accumulate your position. If you're into taking a look at some moving averages, and then we'll go to a 10-day, and then we can go out and go back to this long-term chart. We can see the 10-month moving average is a good kind of support level in general. So we can see over the last 5 years, it's found support there tons of times besides those big, broader market pullbacks. It found support there recently, then soared all the way up to new highs. So if you want to look on a longer-term time frame, that 10-month moving average is one to certainly pay attention to as well. But then, as I said, the 21-day or 50-day or even 200-day would be something to take a look at for Cameco as it pulls back after getting really overheated, along with some of the uranium plays as well. No matter what happens in the short run in terms of volatility or a well-deserved drawdown, Cameco looks to be a long-term winner as a uranium miner and a nuclear reactor play. Therefore, some might want to start a position in Cameco now and then add to it the next time it pulls back to a key moving average. And that does it for me in this episode of Top Stock Picks at Zacks. Please head over to zacks.com/promo page for a look at some of our services, portfolios, and more.